Good morning, everyone. Well, today's round of service sector purchasing managers indices for December got off to a disappointing start as the HSBC Market Service PMI for China fell to 50.9 from 52.5 in November. This comes on the heels of a drop in China's manufacturing sector PMI in December and confirms a slowdown in the Chinese economy. As the government there comes to grips with the twin problems of overcapacity in manufacturing and excessive local government debt, China is likely to be the next country to go through the deleveraging process. That will naturally result in slower growth. That would be bad news for the countries that sell commodities to China, including Australia, New Zealand to a lesser extent, and many emerging market countries. This is one reason why I think the market's bullish forecast for Aussie dollar this year is excessive. Aussie is forecast to fall to 0.87 against the US dollar by year end, but with interest return of 2.9%, that's enough to result in a positive total return against the dollar. Personally, I'd expect to see Aussie dollar move lower than that as the Chinese economy slows, leading to worse performance than the market consensus. Now, dollar yen came off from its highs during the Tokyo day as the Tokyo stock market fell, but it managed to remain slightly above Friday's opening levels and has moved up during the European morning. That demonstrates to me the resilience of the dollar in 2014. The U.S. currency is probably being supported by expectations for today's U.S. data. The non-manufacturing ISM index is expected to rise, in contrast to the fall that we saw in the Eurozone service sector PMI. And U.S. factory orders are seen rising 1.7% month-on-month in November after falling 0.9% in October. That would confirm the picture of an expanding U.S. economy, contrasting with a Eurozone economy that's just barely stabilizing, which I think is positive for the dollar. Although, it must be said that Eurodollar actually rallied a bit this morning on the fact that the final figure for the Eurozone Composite Index was confirmed to show a rise from the previous month. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.